So next up, we've got assessing affordability and customer vulnerability. Thanks very much to the last panelist. Ask the guys to come on. So in this session here, and we're just going to leave that poll up there. So we'll come back to it maybe after lunch. We'll change it after lunch if people want to just add some comments. I think it'll be useful to kind of feedback what you kind of heard and what you thought reflected on it. So this session here is around affordability and consumer vulnerability. I mean, obviously this scheme, is a big part of the collections landscape. It has been for a while, and what I'd say is it feels like even over the last year, the picture just gets increasingly more complex. I mean, we've got consumer duty we just talked about. We've got borrowers in financial difficulty we also just mentioned. There's this blending and removal of particularly vulnerable that's been being talked about as a category, and this financial vulnerability seems to get being blended with vulnerability. So it's becoming it's more kind of complex kind of world. So it's a growing area of focus for us. It's still on all of our radar screens, I know. And so in this session here, we're going to talk a little bit about what we're hearing, what's changed over the last year, what has really changed, and just some of the emerging risks maybe that we're seeing about, and we just saw on that last slide. So with me on the panel for this session here, we've got Anne Atherton, Director of Special Servicing from Blue Motor Finance. We've got Vanessa Northam from Charity Development from StepChange. And we've got Louise Allemagne from Senior Insight and Outreach Manager from the LSB. So welcome to everyone. So again, here we are. So again, I just put up on here just some of the things that I'd kind of heard. I think increasing energy costs, increasing food costs, definitely, and that's been a theme for the last few years. And I suppose, what I wanted to do, maybe Vanessa start off with saying, well, what are some of the demands, if that's okay, what are some of the demands that you're kind of seeing on households today? I mean, does this kind of stuff kind of gel? And has anything changed over the last year?
Yeah, so apologies, I'm not looking at my phone, I've just got all my notes on, so I've gone completely digital. Not sure that's a good idea.
Yeah.
Take my glasses off.
So I have paper.
So demand for debt advice at the moment is up year on year. So we're seeing around 4% uplift on last year. We are starting to see a reduction in the amount of people coming to us with dual fuel arrears. However, that is still at 46%. I was at an Experian conference on Tuesday. And if I didn't work for the organisation I work for, I would be like, brilliant, everything's looking really good, and it isn't, and it's a, I talked to lots of heads of collections, and we're just not seeing it, but it's there, and I welcome a debate potentially on Slido around, well, where is it and when is it going to appear? Clients coming to us are still, the highest proportion of clients coming to us are saying that cost of living is the number one reason for coming to us. We're seeing a small but sizable increase in the amount of people coming to us with mortgages and those in full-time work. So typically in the past, a typical StepChange client would be either part-time, single parent, in rental. It's no surprise that is starting to change. One other thing that, again, I picked up in the Experian conference, I'm trying to use new data because I seem to have been on the talking circuit a lot this year, so I'm trying to give some new insights, but a real increase in older borrowing. So 4 million people now borrowing into retirement. And I think it was quite interesting on the previous panel debate around, greater digitisation, because yes, but if we're going to start seeing, elderly, pensionable people who are on a very fixed income, they're still going to want those more traditional channels. So, yeah, it's going to be an interesting couple of years.
Do you think this juxtaposition of everything's fine versus some of the things that you've been seeing is almost like we're talking about with Richard earlier, almost like the danger of averages? So we look at the averages and everything seems fine, but actually when you look in the detail, then there are segments where people are doing really struggling versus not, right?
Completely. And, there's around Around, I think again, on some of the data from Experian, 1.2 million people are really going to be struggling. So as a proportion of the UK population, that's really low. But that's 1.2 million people potentially coming off fixed rate mortgages, going to see a significant hike, and a real affordability challenge. And increasingly, the resilience, so 2/3 of savings have been used up now, that were built up during the pandemic. So it's consumer resilience I think we should all be thinking about now, because we understand affordability, we understand vulnerability to a degree, but there are pockets of indebtedness, there are pockets of arrears, but they just don't seem to be there. And I think we need to be thinking about what's the long-term resilience of people's abilities to keep tightening their belt, because there doesn't seem to be much coming out that's going to give people hope.
I mean, Anne, I was going to bring you in the conversation. I mean, what's your kind of perspective on what you've been seeing?
I think reflecting what Vanessa's saying, in the arrears spectrum of Blue Motor Finance, we're seeing fairly steady arrears. We haven't seen the peak of arrears that was predicted. Obviously, from a vulnerability point of view, we have begun to look at financial vulnerability in addition to your general, the historic, what we used to understand as vulnerability. But yes, we're not seeing those peaks of arrears that were predicted.
Have you seen in the vulnerability space, and talk about it wider, are you seeing any type changes in characteristics over the recent time? I mean, energy costs came up, but you also got the spectrum of potential vulnerability as well. I mean, are you seeing any kind of changes that are coming through? I mean, I think anxiety was one of the things we were talking about, people not addressing their debts or those kind of things, which seems like felt like that was bubbling a little bit. Have you seen any changes? Or is it pretty much the same?
I would say it's pretty much the same. I mean, it's been a gradual change over the years in I think what we understand as vulnerability, particularly in regard to financial vulnerability. I think the COVID years polarised some of our understanding of consumer vulnerability and what consumers expected. I think going back to one of the points that was raised in the previous session, that we're now seeing people who've never had financial difficulty before and now facing some kind of financial difficulty. And I think that did change in COVID, and we learned to understand and try to encourage our customers to talk about that kind of vulnerability when they didn't really want to. And those are the kind of people we're trying to get to be able to help. But it's this lack of particularly with people who have not been in difficulty before. It's that reluctance to talk about it that we're having.
I mean, that's a good point on when do customers realise they're in financial difficulty? And Louise, we're chatting a bit about, almost like this ostrich effect, where people sort of say, well, I don't want to address it until I need to. And I think it was, Shiraz was raising it on the last point as well. I mean, do customers realise they're in financial difficulty? I mean, what's your kind of view on it? I mean, what do we need to think about that?
So I think there's two things to consider. I think the first thing is a lot more customers are reporting feeling anxiety and stress and worry in relation to their financial circumstances, which recently published a really interesting article on that, and that anxiety is really on the rise. Those are really negative feelings, right? They don't foster feelings of hope and optimism. They foster feelings of hopelessness and pessimism. And that can really erode how confident customers feel about reaching out to people to say they're in financial difficulty. So I think there's that hurdle to overcome. It's breaking down that anxiety and saying, actually, we can reach a good outcome. But talking about those customers who I guess are on the creep, they're creeping into financial difficulty, they might never have been in that situation before. And they might have the stigma of what it means to be in financial difficulty, and they don't associate themselves with that. They don't see themselves as being in that position. So I think you get two barriers really emerging there.
Maybe Vanessa, this whole idea around anxiety and not sort of addressing issues when they need to be addressed, I mean, that's been raised a few times. I think that's kind of an interesting kind of concept. And what do we need to do to sort of break some of that down? I mean, Chris and I were chatting actually earlier, just before we started, around, the fact that is it kind of cultural to a certain extent? I mean, but what do we need to do to help customers to get them to take that first step?
I mean, I really wish I knew, because I can make an absolute fortune. It is such a complex set of emotions. I mean, I've never worked in anywhere else other than the UK, so I don't know what attitudes to money are elsewhere. Is it that British taboo? Are we still not talking about money? You know, we've been talking to one of the bureaus. I feel quite strongly about this. If you're a bureau, and I'm not calling out Experian, but all of them, you can see in the data when someone is starting to go down an indebted path. The data is there. It's there in the open banking data. Suddenly you had 8 direct debits, now you've got 14. You've taken on commitments. So the data's there. I think persistent debt gave us a really interesting insight into how consumers would react, because some of them were not happy. In terms of how we get people to do something earlier, we've seen some recent success with a pilot that we've done with ClearScore, which is the credit rating app. So people are pretty keen on their credit scores, and this is where I think, I don't know if anyone's here from the bureaus, but this is where I think the bureaus play a real part here, on early engagement, to say, just want to make you aware, if you continue doing what you're doing and your credit score's going to go that way, and I'm really keen to see what that communication is, this could be the path that you're going down. You're going to reach a stage where the minimum payments are all going to become unaffordable, and you only need another increase on your mortgage, and you're going to start being in arrears. I don't see that, and I don't think there's a painting a picture, not to scare people. People are scared already. People are anxious, but sort of say, if you start now, it's potentially salvageable. Every single person that we help on a debt management plan says 2 things. Thank you, and the second is, I wish I'd done it earlier. So we also, Chris, are going to embark on a big piece of research. We've got a piece of research coming out the end of this month on more effective referrals, so that'll be launched. 3 members of the FCA have asked to join that, so just to say they might be quite interested in it, so you might want to download the report. But we really have got to look at the psychological barriers, because it's we've got new demographics of people coming, and people are turning to borrowing. Borrowing is on the rise. You can't borrow your way out of a debt problem. Trust me, I've tried in the past when I was much younger.
I mean, and what's your reaction to that? I mean, so early collections, early activity means you get less likely to get into debt. I mean, but it can be a difficult conversation, can't it, with customers, because how do we sort of get past that? I mean, do you have a view on that, or?
It is a difficult conversation with customers, and I'm not sure that the credit bureaus is the correct place for that to start. They do have the data, but that's not really their function, unless we're going to make that their function, which it isn't at the moment. I think each individual lender will have their own way of going about these things, and perhaps we need to have a little bit more industry-wide correlation of that and have all that together. Obviously, we, as part of our conversations with customers, we do signpost to StepChange and other organisations that can help. That's fundamental in any conversations that we're having with customers at the moment. But it's having the conversation. We need to get those customers prepared to engage with us, and they're not always. Particularly, as I said before, the people who have not had financial difficulty in the past, possibly even quite high earners that have suddenly come off a very low interest rate for mortgages, gone on to a very high interest rate for mortgages, and that disposable income that they used for other spending or even paying back other borrowing is now gone.
Yeah. So what are the strategies or best practice that you kind of see to get people to engage early? I mean, what you got any ideas around that? I mean, if it's not the bureau, I mean, how's the best way to go about it from an operational point of view?
From an operational point of view, as I said, each lender will have their own practices of doing this. I can only speak on behalf of Blue and what Blue do. We do try to engage with our customers at a very early stage. As soon as they miss one payment, that's when we're starting to try and engage. But we do need the customers' cooperation as well. We need them to engage with us. We can't force them to do that. We we do our best to do that. We use all the channels. We use all digital channels. We use obviously the telephone. That's the best place to talk to people. But you have to have that engagement from the customer as well.
Yeah.
And unfortunately, those that we would describe as vulnerable, in inverted commas, particularly the customers who are anxious, who are in that mental health issue, the stage, they are the ones who are least likely, because they just don't want to have those conversations. But we can only help them if we can get those conversations going.
So I want to go back, I suppose, to consumer duty, and one of the most interesting aspects of consumer duty that I like is the whole concept around sludge practices. And so are we putting friction in our consumer duties, not just in collections, but even upstream as well, that becomes then an excuse not to then take action? I mean, and there's sort of like, and we were just chatting, Louise, we were chatting earlier around good friction versus bad friction, and when should you have good friction versus not, which I thought was quite interesting. I mean, how do we start thinking about those points of friction in the light of whether people can take action to then address potential future problems?
So I think in terms of what's positive friction versus sludge practices or negative friction, the difference is in what it's going to do to the customer outcome. So if it's friction that's going to lead to harm or detriment to the customer, then that is a sludge practice. And I'm just going to give an example. Imagine you've got a customer who's vulnerable. An unauthorised third party calls up to notify you of that. You said that you can't make a record of that because they're not authorised, when actually you can, as long as you're not disclosing information to that third party. That would be negative friction, because it's a process that exists that's not going to let you get to the right outcome. Versus positive friction, if you've got a customer who's been asked to authorise a payment, for example, and gets an effective warning to help alert them to a potential scam, I think it comes back to what you're actually trying to achieve. So if you take like a vulnerable customer journey, what is it you're trying to achieve? Or if you're assessing affordability, what do you want to get from that? And it's thinking about what that step is and whether it's going to be a detrimental step to that point or a positive one.
So do you think this idea of friction versus anxiety, or the ability to take action, is quite an interesting sort of connection for me, at least anyway? Do you think that's kind of like a way of thinking about it? So are we introducing barriers for people to take action versus not? I mean, or maybe Vanessa, I don't know what you think about that. Or,
I mean, I think
it's quite interesting what you're saying.
in terms of barriers, I think when you're designing collections journeys or pre-arrears journeys, is consider and use lived experience, but consider the mindset. So if you've got consumers who are frightened, anxious, shame, they are not thinking rationally and logically. So the tone and the language of your communications you have to be really aware of the mindset of that person. As a result of consumer duty, we've rewritten all our communications. We took a really long, hard look, and we based them on the reading age of an 8-year-old and language that's very different. And we are seeing, everything from understandability, because some of the stuff we have to explain is, if you're going to go on a debt solution, there are consequences. So, we've learned through that. We're happy to share that research with you as well. But it's about really thinking about the mindset and some of those barriers. So if the first time you've ever missed a payment, is it the same journey as you are habitually every 3 months missing a payment versus, and the FCA keeps saying this, it's not one size fits all. Because if we always use, I've moved bank accounts, something's happened. Or, I've had a continuous payment authority and the debit card's changed. That's a very different communication and transaction. I just want to go digitally and do it versus I'm in and out of collections every 3 months. There's something going on. And I think we also need to think about the first time somebody misses a payment with you doesn't mean it's the first time they're missing payments elsewhere. They are, you see that bit, and when people come to us, we see all of it. On average, they've got 9 debts and they're dealing with 15 organisations if you include the landlord and the council tax. And their experience is going to be so different. And if you've heard me speak this year, you'll have heard me say this. My first engagement is with an FCA-regulated organisation. I'm likely to continue making those calls. But if my first conversation is about a parking fine or council tax, local authority, and I've missed 2 payments, and I'm into enforcement, I'm not going to engage with you. That's the barriers. We've got multi-sector, different approaches, different regulations. We had Sheldon Mills from the FCA speak at our event in September, and he's pulling together the UK regulator networks to come and say, you know, what's the equivalent consumer duty in telecoms, in water, in energy? The forbearance options are much, much more limited than what you're providing. Consumers don't know that, and it's really hard to navigate. They don't know what to ask for.
Yeah, so it's quite interesting if it's not with an FCA, I know the UK regulator network are trying to pull it together, right?
They're trying.
And I heard the thing from Sheldon, but if you go and talk with a non-FCA regulator, then that's enough to be a point of friction to say, I'm not going to now speak with you, which a creditor might not be aware of at that point, right?
They won't just owe you money. That we had a client speak, and we sort of said, you know, it's one thing you want to send to everybody, say, I don't just owe you money. And how do you design a journey of saying they're probably owing other people and they're probably in a bad way? And go and look at your collections letters and just put yourself in the mindset and say, could I do something different? Because if it's not working, you might want to try a different approach or try a multi-different approach.
So I want to bring the conversation back to good customer outcomes, I suppose, which is what we're kind of trying to achieve. And I want to talk a little bit about affordability, and which certainly on financial difficulty was a big thing we used to use to determine, you know, what's the right treatment path, as an example. I mean, is that still the best way for us to assess that? I mean, and maybe comment on that. I mean, it's sort of been at the core of a lot of conversations we had, but what tools do we have? And, you know, is affordability the best way to do it? Are there other tools that we should be looking at there to get the best outcome, if our focus is on getting the best outcome?
Affordability has to be obviously the driver, because we don't want to be putting people into a position where it's actually impacting other parts of their lives. At Blue, one of the first things we do is say to the customer, is this your only problem, or do you have other problems also? Are you not making other payments? Because that way then we can see what the best outcome is for them. And affordability plays a huge factor in that. Again, that is not always an easy conversation with customers because they don't want to talk about that. We'll have customers who will say to us, but I only want to talk about this payment I've missed. What else I owe to other people is irrelevant to this. I don't want to talk to you about that. We're trying to use open banking as a tool to help us to help our customers. So, and from that we can see that they have other issues as well, and we can try and tailor a solution according to that. But we don't always have that interaction with customers. Customers are not always happy to give us that information. They just want to talk about what they owe us.
How much friction do you think that introduces into the process? So you talked about open banking, which is probably a little bit less friction than, say, doing it in a whole manual sort of SFS sort of, you know, form. I mean, how much friction do you think that introduces into the process, and how much of a barrier is that to getting good customer outcomes?
It can be.
Can it be? You know, I suppose
it can be
good
or bad friction, to be fair. If you have a reluctance from a customer to engage in that, then, and you're saying to them, I can't help you unless you do this, then obviously it's a very poor practice. You don't want to do that at all. We try to trust our customers' judgment that if they tell us they can afford a payment of some sort, they can afford a payment of some sort. And we will tell them that we're not looking at your open banking or your affordability to increase what we're asking you to pay. We're looking at this to see, are we looking to you for the right amount to pay us in order to leave you some resource to pay all your other things as well. But again, we do have this reluctance, and that's where we signpost. Well, we signpost first, actually. It's the first thing we say to customers. If you have other debts as well as this one, then there is advice out there for you. But I don't think it's necessarily a bad practice to use this, as long as you're not stopping it from having the engagement, as long as you're trying to engage with the customers and come to a solution that fits that point. The issue is that you can do that, but then it'll change next month, and it'll change the month after, and it'll change the month after, unless you can get a clear view of everything that the customer is facing.
And Louise, I mean, I suppose just we're talking about friction before. I mean, what do you think are some of the best ways of getting the information you need to get to make the best outcome? And that could be vulnerability as well as financial difficulty. Have you seen any things that you think, well, that's an interesting kind of idea to sort of take that friction piece out?
I think to answer that, I'd go back to the earlier point that you made about how do you measure a good outcome. And what I'd say is assessing affordability is how you check if something's affordable. It's part of getting the right outcome, but it's not the full sum of it. To get the right outcome, you have to tailor the solution to the customer circumstance. And so you asked there, what sort of things can we do to make sure we're getting the right outcome? And I would say it would be actually understanding the customer's specific circumstances. So if in the conversation, to Anne's point, you realise that insisting on an I&E when the customer maybe can't do it, they don't have the information, they're not the best person to be able to do that for some reason, adapting to that and being flexible and finding a different way to get to the solution, that's how you reach the right outcome. So I think it comes back to tailoring it to the customer's specific circumstances.
So that is that tailored journey, so as well. So what you're kind of saying is you've got to listen to the customer and then tailor your journey based around what you kind of hear. Am I paraphrasing that back? For the best support for them.
I guess what I'm not saying is that you have to have an individual journey for every individual, because that would frankly just be unrealistic.
Yeah.
I think it's recognising that all customers have different needs and understanding who your customers are. Every firm's different, right? But you're going to have some customers that represent the masses, some that represent the underserved. You're going to have lots of different customers, and getting a clear view of who those customers are and being in a position to respond to those different needs, that will help you give tailored journeys without having to have individual tailored journeys, if you know what I mean.
Yeah. I mean, it introduces an operational point if you have too many tailored journeys, but like how do you kind of manage all that, right? So
Yeah, and I don't think it's, like I said, it's not about having individual journeys, it's about having the processes that you have, but recognising that all customers are individuals, so that when you're interacting with the customer, be it digitally, over the phone, via post, you are ready to listen to what their specific needs are and respond to that accordingly.
Yeah. Vanessa, do you want to?
Yeah, so I think a couple of points. I think the communications leading up to that first missed payment are really important. So, you know, what are the sort of what are the communications that says if you're ever in trouble, contact us? Are we too scared to put that on because we think people are going to go, oh, I'd like to not make a payment this month? I don't know. I mean, try it, potentially. But I do think, and, you know, I started my career in a contact centre, and it is really, it's a tough job, right? To take each call and be present and listen, but understand the bravery or the mindset of that consumer. So they're making a phone call, it's, you know, it might be the sixth one they've made that day, but how do we engage and train and keep those advisors if it is going to be contact centre? This is where AI, you know, you don't get robot fatigue, but you do get desensitised to it, you know? So I really feel for the guys taking these calls. We're expecting them to do so much, more bespoke, more tailoring. How is that reflected in the training and the way that they're managed, supported, treated in organisations? Because if you're in a processing plant and every second of your day is monitored, and I understand that that's, are you going to get the best outcomes? And that's a really tricky one, because it's the biggest cost in a business. So this is where AI could support. Could it be a co-pilot? Could it sort of sit there and go, this is the 7th time this customer's phoned this year, they've changed their direct debit date 4 times, there's this, there's that, there's the other. And it's suddenly like, oh, right, I might need to think differently about this customer versus this is the first customer of the time this customer's ever called us. They've never missed a payment before. Ah, right, that might be a different conversation. How could AI help, not replace, and keep those conversations more present?
Yeah.
I don't know.
So I've just had taken a quick look at the questions while we we're chatting down. There's a juicy one, I'm afraid, Vanessa, for StepChange around, I think it's trying to talk a bit about, does the fact that we're advertising around fear of debt, and I suppose addressing debt and sort of campaigning around debt, does that heighten fear in consumers? Do you think it's sort of driving volume or driving concerns, or do you think it's actually kind of helping? And it goes back to this earlier question around sort of like how much we're seeing in the media versus reality versus what we're actually seeing versus not, or is it just uncovering an issue that's there anyway? I'm not sure there's an answer to that.
It's such a big question. I mean, we've changed. Our latest sort of strapline is debt happens, let's deal with it. And again, I was at the Experian conference, and I was like, yeah, credit's a really great thing. I should feel absolutely fine about the fact I've got a loan and this, that, and the other. And it's like, but I don't feel like that. I feel ashamed. I worry about making my payments. So it's a real deep-rooted, I think, psychological issue that debt is bad. You're going to be judged, you're going to be shamed. I mean, somebody, I think, spoke at a conference this year, said it dates back to religious times. And if you were borrowing money, you were bad. I mean, some religions, I don't think you can't even borrow. So, yeah, so if you are a borrower and you feel bad about borrowing, or you feel bad about the fact you can't repay, how do we deal with that? It's a massive issue, and I think we need more research into it. We've not mentioned buy now, pay later. I mean, that is an unregulated part of the sector, and I think that's going to be a real hidden spike of indebtedness that we're just not seeing at the moment. But yeah, in terms of the fear factor in the media, I mean, the government's in debt, the country's in debt. Yeah, debt is everywhere. So how do we break the stigma? I mean, we're trying, but it's really tricky.
Yeah. And there's
no more questions like that, please.
It's kind of like there's a bit of a circular kind of argument there in terms of like you want to make people aware of it, but does that flag it up? And it's a bit like mental health. You want to make people aware about those mental health issues. Does that mean more people realise they've got mental health issues, which then creates it? But is that actually a good thing, right? There's a sort of like that's kind of circular argument that kind of goes round. Which I think is interesting. And there's another question here just around pre-arrears, and around sort of, we talked a bit about signposting, talked about the SFS. I mean, is pre-arrears communication, do you think it's going to be best practice? I mean, do you do pre-arrears? I know we talked about, talking with people, but that pre-arrears piece, do you think that's worth doing?
That's something that we're working on at the moment. At what point do you look at pre-arrears communications? We do try to make it our customers aware that they should talk to us if they're feeling the pinch. If they think they're going to have a problem, they should be trying to contact us beforehand. Now, whether we can contact them, again, you have this piece of, do people really want to be contacted if they're not in arrears? We can perhaps see signals where there may be some issues, maybe payments are made a few days late or something like that. And those are the people we're trying to reach out to. But there is a very fine line between contacting people before they go into arrears and irritating people who are not going to get into arrears that you're trying to help, but they don't want the help. We have to respect the fact that some people do want to manage their own finances. And again, talking about debt only becomes debt when you can't afford to pay your credit. If you have credit that you can afford to pay, it's not debt. And it's not considered to be debt, and it's not something to worry about. It only becomes debt and something to worry about when you suddenly can't pay it again.
Okay. So at this point I wanted to go back, I suppose, back to this idea around sort of like the broadening of the definition of vulnerability. I'm kind of calling it, but I suppose it's sort of like financial vulnerability sort of getting wrapped in, and it feels like we're getting into this much more sort of like complex world where it's harder to separate what would be a FinDiff team versus a vulnerability team, and they sort of like it's becoming more complex. I mean, how do we not need to start thinking about this? And we were chatting beforehand, Louise, a little bit about, well, actually they are still separate, or are they combined versus not? I'm kind of saying they're combined, and you're saying, well, you've still got to think about them slightly separately as well. I mean, what was your kind of view on that in terms of, is it becoming more complex?
I think they are two separate issues. I think it's important to remember that someone can
still two separate issues, yeah.
They can be, right? They can be, you can have someone who's in financial difficulty, but is not susceptible to harm. They're not classed as vulnerable. But you could have someone who's vulnerable and can still maintain their payments. I think it's important to recognise that the two don't always correlate with one another, but they absolutely can. So it is complex, that is hard, right?
Hmm.
It goes back to that point of the conversations you have with customers, which I appreciate can be challenging to initiate to begin with. But when you do, it's about actually understanding specifically where the customer sits in that journey. It might be that they're vulnerable, they can manage payments, but they need to be signposted to make sure that continues to happen. So they might be vulnerable but on the creep of being in financial difficulty, and it's just about making sure that you get the right outcome based on that circumstance.
Yeah. I mean, that's my argument back was, at the end of the day, we're talking about one customer, even though they might be in two different processes. And like, you know, is it around like how do you get the best support? I mean, I suppose it's how do you operationalise that?
I mean, that's for each firm, isn't it, to sort of decide what's best for them. But if you've got a customer who's vulnerable and you've got a specialist vulnerability team, they should naturally be exploring what the impact of that vulnerability is on the customer's ability to pay. That just comes out in the conversations that they'll be having. So I don't think it requires a different process. Similarly, if someone's in financial difficulty but they're not vulnerable, you'd still be training those teams in financial difficulty on how a customer can become vulnerable. So I don't think it needs separate processes. I think it's being cognizant on both sides of the way the two can bleed into each other.
Yeah. Vanessa, from StepChange point of view.
Yeah, it's another complex. I mean, so I'm partially deaf. It doesn't make me vulnerable, but I would be classed as vulnerable on something like the Priority Services Register. But it doesn't drive any financial vulnerabilities, okay? So contrast that if I was hard of hearing, not able to use the phone, but I prefer to use online, but your collections journey made me call you. So that's where it's okay. Well, that starts to blur the lines. You then contrast that with somebody who's got a gambling addiction, complex mental health, and has a direct impact on their affordability because there's a causation, there's a big correlation. So it comes down to having some really brilliant journeys, but really brilliant people to be able to cope, because you're absolutely right. It's not black and white. It's very difficult to make this black and white. And therefore, that human interaction, that empathy, and this is where I disagree with the previous panel around, can AI really do empathy? I think the jury's out on that one. You know, there's no way an AI can stop somebody crying for the first 20 minutes when they come to us. But it's that empathy and that listening in and that questioning and saying, you know, what do you need from us in order to resolve this? Is this a long term? Do you think there's a payment that's going to be affordable? Would you like me to give you some additional time? Can I give you some breathing space? So it is, I mean, it might be easier operationally to have one super great team that can deal with all of it, but it's in isolation of, you know, they come together when that person's in arrears and in collections. If they're not in collections, then, and you understand the vulnerability, you know, it doesn't impact their ways of accessing the product, then I think, you know.
Do you think those needs are going to be different for where they are in like almost like the collections life cycle, be it early arrears, maybe, and sort of more sort of early arrears, recently gone into arrears, versus debt advice as an example where you're dealing with it on a consumer basis? Do you think the needs are going to be different, and the needs around automation are going to be different, or do you think it's the same throughout the life cycle? Because customers could pop into anywhere into that journey.
I think the complexity of what we see in debt advice is because of the prolonged nature of what's happened, because people have waited on average 12 months. So despite all the great signposting, they don't want to admit, you know, to come to us. And I think we're going to see a real challenge with high income users, high income brackets, and people with standard of life even contemplating coming to a charity. So that's another challenge, although we are seeing it. And this is where digital routes are really important. It isn't enough to just give phone numbers and websites out anymore. It's got to be, you know, integrated into digital journeys as well. Sorry, I completely forgot the question.
So is it around, do you need to have a different kind of approach if it's early stage versus late stage? I mean, so maybe Anne, comment around, you know, so the complexity we talked about in debt advice, can you use more digital, do you feel, in sort of early arrears, as an example?
Possibly, because you might have more transient vulnerability. I mean, somebody that's you know, in long-term disability is going to be, you know, in deep-rooted collections for some time. They are going to need very much hand-holding, lots of support versus somebody who maybe has had a bereavement and, you know, House of Cards has fallen down, they're waiting on probate. You know, that's going to be quite, you know, they might be in collections for quite some time versus somebody who's got permanent long-term vulnerability. So, and that can pop in and out in terms of that collection.
Just to bring it and bring you in, I mean, the other message that comes out from what you're saying though, Vanessa, is getting to it as early as possible and getting the help as early as possible was almost like the biggest factor in helping them get better outcomes, it sounds like. I mean, and what's your kind of reaction to that? I mean, I'm sure you're doing that with early signposting as much as you can. Can we do more, or how can we do more if that leads to better outcomes?
I think we see things from a different perspective to perhaps what Vanessa and her colleagues are seeing, because obviously as a motor finance lender, we have a short-term, essentially in the great scheme of things, we're talking about 4 or 5 years relationship with our customers, and we would only lend to them if they were in a solid financial situation anyway. So when we have customers with Blue who are facing financial difficulty, it tends to be for the first time, or you know, they've had it before, but they've recovered and we're back into it again. So although we do try to interact with our customers and find out what other issues they have, what other problems they have, ours is quite transient. It is much sooner than Vanessa's probably saying. So anybody that we are dealing with would tend to have, it would be the beginning of the problem, not be really deep into the problem. But as we support our customers through that, we try to help them to not fall into that morass.
I suppose if it's the beginning of the problem, I mean, you can come back, Vanessa, I suppose, is there a way of sort of like, if there is the beginning of the problem, that seems like a key point to then helping them discover if that really is a problem, like sooner, if you see what I mean. I mean, do you think there's tools or ways of being able to do that? And I suppose there's a bit of a complexity there around sort of, you know, running the business as well to a certain extent.
Yeah, I mean, it's about what's going on. You know, when a consumer presents to you, you just see that piece. So yeah, they could have looked great on paper 4 years ago and are really worthwhile. And by hook or by crook, for the last 4 years, they've maintained that payment, but actually they're on long-term disability. Their partner might have taken another job, and you haven't seen any of that because they've made all their payments, and that's the challenge. Because why would they? They don't want you to know. They want to keep that product and that car on the road, and that's, you know, and nor do you, and nor should they. But it's about, you know, that first call. It comes back to all those communications saying, all right to engage, we're here, we've got brilliant people, we've got loads of support tools, come to us, and normalising that's the biggest barrier.
And I'm not wanting to argue with you, Vanessa, but I suppose
But
we're probably going to talk about it later, was also like hindsight's also 2020, right? So if you're sitting in debt advice, you've got the ability to be able to hindsight and say, look, all these things have kind of happened. Yeah. I think the challenge, I mean, and sort of jump in, is like, how do you do it in the near and now when they're on the call now? I mean, are there tools that can help? I mean, is there digital tools that can help? Is there data that can help? I mean, any kind of thoughts around that from any of the group, really?
I mean, there is no... I think open banking might reveal some sort of vulnerability. I mean, you could look at everything. It's a while since I've worked in open banking, but have they got significant amount of prescriptions? Are they, you know, are they gambling? I mean... And then how do you broach that in a conversation? I can see that you've got a gambling addiction. What's that got to do with you? Yeah. It's incredibly difficult. And yeah, hindsight is a wonderful thing, but every single one of our clients wishes they'd got help earlier. So how do we collectively, and they only get to us really through this process, how do we break that? How do we take that 12 months and get it to 6 months? Because the options are much more palatable and... But
so that's the nub of the issue, is like, without hindsight, how do you do it, right? Because, you know, the regulator, or whenever we do the reviews, is always with hindsight, isn't it? That's always which is very easy to say, you should have done this, you should have done that. But like, how do you do it? And that's the challenge in operation. How do you do it in the moment when you're on the call, that you identify it? And that's kind of the challenge, I think. I mean, and that's kind of the challenge, really, that a lot of agents will face.
It is the challenge, and perhaps we are a little reactive rather than proactive, but at the same time, going back to my point before, you have all the data that points to various things. Unfortunately, data is historical. You can project from it, but your data is historical. It's happened by the time you get your data. So do we then start contacting customers when we have this data? We don't check credit files and so forth during the course of our agreement, and we don't need to. But should we? Is that where we're coming to, that we should be monitoring our customers all the time? I'm not sure whether that, for customers who don't need that, is an intrusion. Yes, it's a probable way of identifying customers' vulnerabilities. But again, going back to the COVID years, when we were talking to customers for the first time who'd never had difficulties before, and we're back into this with this credit crisis we have at the moment, customers don't want to be called vulnerable. So, but then you have genuinely vulnerable customers who won't admit that they are genuinely vulnerable, and then we have to find a way of dealing with that, and the best way to do that is with interaction with that customer. So the data can possibly identify the customers that we could deal with slightly differently, but the first point is the engagement and trying to get those customers to engage. And we do this on our communications. We do say to customers, not quite, we have lovely people come and talk to us, but we do have on our communications that go out to customers, letting them know, please talk to us. If there's anything at all, we're here. We have a lovely team of people who are ready to talk to you. We do, as it happens, have a specialist team who handhold, as you used the term before, customers who we know are vulnerable and are happy to be categorised as vulnerable, they know they need more help. But it's the difficulty is around the customers who, as you say, pay our payments every month. We don't know they have other issues, and I'm not sure that the data that we have would identify those if they didn't want to be identified.
I wanted to move on just a little bit around, we talk a lot around, use the word vulnerability a lot actually, and that's come up before around whether we should just use the word vulnerability because it doesn't have a stigma related to it. So, so other people said, like, do you use like complex needs or those kind of things, which I think was kind of interesting. The other idea that's sort of been coming up is really around, we spend a lot of time sort of recording what the vulnerability is rather than what the support is that they kind of need, and almost like that's almost like an internal looking, I want to know what's wrong with you versus what support you need. I mean, Louise, what's your kind of view on that kind of, do we have that approach around the wrong way? I mean, is that kind of shifting, do you think, to talk about support needs? And where's the value of knowing what the challenges that someone's got, what the cause of the challenges is?
I think it's the starting point, isn't it? Because it allows you to figure out what the right support needs to be. So it's the starting point. And like Vanessa, I started off my career working in collections on the phone. It was the hardest job I've ever had, I'm happy to say. It's not an easy task to do. So I think we've done a really good job of supporting colleagues in being able to now identify, to your point, signs of vulnerability. But we also need to help support them in understanding what that impact is actually doing to the customer, and then understanding what the business can do to support them and what support they as an agent can provide to the customer. One thing we really advocate at the LSB is trying to bridge the gap in life experience for frontline staff, so that when they're speaking to customers and they don't necessarily share the circumstances that they've been through, they're still able to empathise with them and understand what the impact of being perhaps having a gambling addiction has on someone's ability to maintain a repayment plan. So I think identification is the important starting point, but you have to assess the impact to then give the right support, and we need to help frontline colleagues understand how to get under the skin of that.
But when you look at the causes, I mean, there's like, if I go back to the FCA document, I mean, there was like 4 columns of about 10 causes on each of them. So there's quite a few different causes out there. I mean, it's a huge number of flags and sub-flags versus what can we actually do to help, right? Which is probably a smaller, subset of that in terms of, be it, text versus phone, or additional support, or whatever it is, right? So, I mean, are we making it more complex than it needs to be? I mean, or do we need to start recording the support mechanisms in the systems?
I think you have to be, the thing is, you can't tell a firm what support to provide, right? Because that's down to each individual firm and what they want to do commercially. But as an organisation, if you know who your customers are, which is a point I was making earlier, then you can start to assess the sort of support you have available and if it really suits their needs. COVID brought about payment holidays. Were they being used before? Is it something that's being used now? Thinking about the sort of solutions you have available, and if they're genuinely going to support customers, I think is the important thing. So you're not going to necessarily see a list of support that's available that the regulator endorses, but as a company you can decide what's available and make sure that the frontline colleagues can give it as well.
Yeah. Vanessa?
Yeah, so a couple of points on that. I think the lived experience in contact centres is a challenge. We're doing a small pilot with NatWest at the moment, helping their small business customers, and actually half of the team that are working on there have run their own business by fairly big fluke, but the empathy is just amazing. We're getting 100 NPS points, 100 customer satisfaction, because the empathy's there and they're able to relate. So I think that is something for everybody to sort of think about. We've got remote working now. Should we be looking at diversifying ways of working to bring in more lived experience? On the second point, I previously used to work for an energy company, and energy has things like PSR, so vulnerability's been around a lot longer in energy, but it was so complicated to join the dots for advisors to go, I've got somebody who's told me they've got something called COPD, I've no idea what to give them. So we created a system which was search enabled. It automated whether they need to go on the priority register, whether it was a household, and then we gave them almost like a Moscow. So this is what you must do, this is what you should do, and what you could do. We included absolutely everything. So everything from, are they on the best tariff? Should they be signposted? Do they need Braille? Do they need this? Do they need that? And the advisors absolutely loved it because they felt they could tailor it, but they didn't have to. And one of them, when we rolled it out, oh God, I've got to be a doctor now as well as everything else. But they didn't have to because the system did it for them, but they weren't robots. And I think, again, how do we use AI to complement an empathetic conversation with some really good next best actions based on the actual circumstances of that customer?
I mean, and just in terms of like agent support, when we talk about agent support, and it could be digital as well, but I mean, how do we best equip agents or our teams to best support customers who are in that sort of like kind of areas of need?
Yeah, I think that's something that's evolved over the last few years. I think in a contact centre we've gone from how much do you want to pay this time to can you pay this time? So we have evolved. That's taken a lot of training. I suppose stereotypically your contact centres are young people, and trying to instill that empathy into those young people without life experience can only come from good training, good management, and your digital solutions can help in that. As you were saying before about finding a solution rather than just recording the vulnerability, and that's a piece that Blue's been working very hard on recently, trying to work out how we do that, not only how to record the vulnerability, but how to record the support that customer needs. Sometimes the customer only needs, if we're talking about complex vulnerability, which would be, an illness or a condition that would making those payments more difficult. Do we need customers who speak to the same person each time so that they're not having to repeat that awful story over and over again? That's a piece that we've been working very hard on as well. People with language barriers, and we are looking at a digital solution for that will translate into various languages. So there are things that can be done digitally, yes, but it doesn't beat personal speaking to that person and understanding that difficulty at that time.
Okay, really interesting. So we're almost at time. So I just wanted to go quickly across the panel around, like, where do we go from here? What are the biggest things we got to watch out for? I'm going to go across here. We'll start with you, Louise, in terms of big top thing to watch out for. We've got to have on our radar around, affordability and vulnerability. Do you think?
I think we've talked before about customers who, on the surface, seem like they're managing, but are actually, having to rob Peter to pay Paul. They're really struggling in the background. So being mindful that although customers are maintaining payments, we don't know what the impact of the cost of living crisis is on their financial resilience and well-being. I also think it's really important to focus on inclusion. We talk a lot about how we can move forward with digital innovation, which I think can play a fantastic and important role in delivering fair outcomes. But it's also important to keep an eye on not leaving those customers behind who might not be as digitally savvy.
Okay, digital inclusion. Vanessa?
So 3 things, I think. Remember that they owe other people money. Second is that how do you support your advisors to really listen? And then the third is, I think, we all need to invest in greater insights and research to really try and crack this psychological barrier.
Yeah. And Anne, your last word.
With the other 2 speakers, I think they've pretty much covered everything I was going to say anyway. But yeah, and again, just keeping that respect of understanding that people don't necessarily want to be classified as vulnerable, even if they are. And it's having that respect, your training of your staff, your support of your staff, to make sure that they're delivering those good outcomes.
Okay, well, fantastic. So thank you all to everyone on the panel. We'll just give them a quick hand. That'll be perfect. Thank you very much.